This is a serious, important task that we feel that has been assigned to us. A lot of people want to know, well, what's going on? What's this thing all about? Well, it's not real complicated. Our tax structure in our state has sort of accumulated over a period of time. And once in a while, it's a good idea to go see the doctor and just get a checkup. And that's what we're doing. We're going to get a checkup to see if we're doing the right things, if we're optimizing our revenue and minimizing the economic negative impacts of this, and at the same time dealing with all the citizens of our state in a fair way. Today is our third meeting, and it is for public comment. We have an entire agenda that goes all the way through till a little after 2 o'clock, and we've asked the commission members here if they'd be willing to stay just a little bit longer so that we make sure everybody gets heard. Thank you all for signing up early, those of you that want to testify today. In that there are as many as there are, we're having to limit it to 5 minutes per speaker. If the speakers would sort of get cocked and primed when you see your schedule, see you coming up, you will testify from here. And Marie Thomas is going to stand in the back of the room back there, and she is going to give you the signal when you got 1 more minute. Because again, we got a lot of folks here just running them through at five minutes a time. We're going to be here beyond our allotted 4 hours. So if you would, please be ready to come to the podium to maximize your time. And then when Marie gives you the high sign, if you could please wrap it up. By the way, I don't know how many of you, this is your first trip to the Telecom Center, but I had the privilege of serving on the board of this facility when it first opened up. And I'm happy to report that this has been a success as far as service to the state and the community, and also financially. It has worked very, very nicely. We really are blessed to have this facility and to be able to take this opportunity to use it. And I'm going to get mad at Alvino Castillo if he don't show up here in a little while, because he and I are going to alternate as the moderator here on this facility. So without further ado, since we do have such a schedule, why don't we go ahead and get started? And first presenter we got today is Mr. Tommy Timms. Mr. Timms.
Good morning, ladies and gentlemen. My name is Tommy Timms. I live here in Jackson. I'm chairman of Park Development. I'm here to talk to you this morning about taxation of Section 42 affordable housing. My company, Park Development, Park Companies, is the largest developer and owner of affordable housing in the state of Mississippi. Because of the lack of uniformity in valuation of affordable housing across the state, I supported the legislation, Senate Bill 3100, that passed the legislature in for effective 2005 year. This legislation mandated the use of the income approach in valuation of affordable housing. It's worked very well across the state and is now a more uniform assessment. Since the implementation of this bill in 2005, at each legislative session, the Board of Supervisors have sought to repeal the law. I urge this committee to look into this valuation technique and support it. I urge you to support the legislation as it is now enacted. is particularly important for affordable housing across the state, but also in the 5-county GO zone along the Gulf Coast where we have so much need at present for affordable housing. I want to present to you to support me in this effort, Jerry Hafter with Phelps Dunbar, who was the consultant that crafted the original legislation for the state. Thank you. And Jerry Hafter.
Thank you, Mr. Chairman and committee. Tommy has made the main points we want to make today, but I'm going to make about 3 or 4 additional points, and you each have before you a short paper that explains this, sets out the existing law, and explains why it's important that no changes be made in this law which would set back affordable housing in this state. Section 42 of the Internal Revenue Code is the basic mode for developing new affordable housing in this country. It's been very successful in Mississippi. 31,000 units of housing have been built since this was passed in 1986 as part of the Tax Reform Act in the Reagan administration, with tax credits of over $170 million expended in the state. It is absolutely essential to be able to rebuild our Gulf Coast counties with this housing now. The problem before 2005 was that there was no uniformity across the state in the taxation of this property, even though our state Supreme Court had clearly spoken that our Constitution requires rental property to be assessed in accordance with its rent-producing or net income value. In 2005, the legislature spoke, signed by the governor and supported by the State Tax Commission, that we have a uniform approach in which Section 42 and similar programs are assessed according to their net operating income, capitalized by a value set by the State Tax Commission, which the Tax Commission has done, established clear procedures. If you'd like to look at those, I know Chairman Blunt is here. We can talk about that in more detail, but the overall picture is it's a fair system at the present time. The system complies with the state law, which our Constitution mandates that property be assessed in accordance with its true value, and the true value of rental property is established in the Rebelwood case, which is a statewide case interpreting 112 of our Constitution, is you must use in regard to rental property its income-producing capability. I'd like to urge you to look at the paper. It has the present law. It has the reasons we should support that. It has why it's consistent with our Constitution. We'd be glad at a further time to address this in detail and explain the importance of these programs to our state, to keep these properties solvent, and to encourage the building of new properties under Section 42. Thank you. I see a hand up.
Next we have Mr. Bo Whittington of the Mississippi Tourism Association.
Good morning. My name is Bo Whittington, and I'm president of Convention Display Service, and I serve as vice president of legislative affairs for the Mississippi Tourism Association. It's in that capacity that I'm speaking to you today. The Mississippi Tourism Association is a statewide organization made up of tourism professionals. Members represent convention and visitors bureaus, hotel and lodging, restaurants, bed and breakfast, convention centers, casinos, campgrounds, chambers of commerce, museums and attractions, marinas, amusement parks, historic sites, national and state parks, civic centers, golf, travel coordinators, sporting events, cultural events, hunting and fishing, Main Street program, travel publications, and family reunions, just to name a few. Tourism is big business in Mississippi. In state fiscal year 2007, tourism ranked 6th in total statewide employment. Tourism is an economic generator. Annual payroll for direct tourism jobs was $1.7 billion. Total payroll associated with tourism, direct plus indirect plus induced, was over $2.4 billion. Total tourist visitor expenditures were $5.7 billion. Tourism contributed over $380 million to the state's general fund. tourism contributed an additional $143 million in city-county tax revenues. Tourism is an economic generator. Statewide tourism is funded with a state appropriation to the Mississippi Development Authority Division of Tourism. Their primary focus is to advertise Mississippi and promote Mississippi outside the state and to the world. Local advertising and marketing is accomplished through the Convention and Visitors Bureaus. The Convention and Visitors Bureaus are funded with tourism taxes. Tourism taxes are made up of local, restaurant, and/or hotel and lodging taxes. The tourism taxes have historically been used for direct tourism-related functions like tourism promotion through the Convention and Visitors Bureaus, tourism facilities like convention centers, tourism-related festival and events, tourism advertising at the local level. Over the years, there have been attempts to hijack tourism taxes for other purposes, but the Mississippi legislature has mostly protected and safeguarded those monies for local tourism development. The legislature has further seen the importance and impact of these local tourism dollars with the creation of specific House and Senate tourism committees. If you overload tourism taxes with municipal functions or any other non-tourism related functions, you're going to cook the goose that lays the golden egg. Tourism as an economic generator to the state and local economies will be greatly diminished. Tourism promotion, advertising, facilities, and events will have nowhere to go when additional funds are needed to expand their mission and bring more visitors to our communities. We're asking that you recommend leaving tourism taxes, local taxes on restaurants, hotels, and lodging facilities for tourism development. We're leaving all commission members a quick fact sheet which you have in your possession, which includes a list of Mississippi Tourism Association members, the latest Mississippi Economic Impact Report on tourism, and a copy of my remarks today. As I said before, tourism is an economic generator. Let's not unplug the generator. Thank you for your time and attention.
Next, we have Paul Varner with Butler Snow.
Chairman Speed and members of the Commission, I appreciate you giving me the opportunity to speak today about an issue that is important to me and I think should be and may be important to you as well. My name is Paul Varner, and I'm an attorney with the Butler Snow Law Firm, practicing in this firm's Jackson office. My area of specialty is tax law, and a good bit of my practice involves representing taxpayers who are audited by the State Tax Commission, and I want to talk to you today about that process, that tax dispute resolution process. I know much of what you'll be looking at in connection with your work on this committee will involve the types of taxes the state of Mississippi should have, the rates for those taxes, the exemptions that should apply to those taxes. But I want to make a comment to you today about the tax dispute resolution process and submit to you that that is an equally important subject for this committee's work. Currently, in Mississippi tax law, there are two levels of administrative review that a taxpayer can take advantage of before having to go to court. Those two levels, of course, are the Board of Review hearing and then the appeal to the three-person tax commission. There are currently no barriers to entry. There is nothing that would preclude a taxpayer from taking advantage of those administrative review opportunities. They are informal, and to the Commission's credit, they do the best job that they can do to give a taxpayer an independent and objective review at those hearings. But if a taxpayer cannot resolve a dispute at those levels, the taxpayer's next choice is to go to court. And generally that's an appeal to the Chancery Court. But in order to go to court, the taxpayer is required by the statute to either prepay the tax or to post a bond that is double the amount of the tax in question. And I would submit to you that that is an unfair requirement to put on a taxpayer in order for that taxpayer to have the first truly independent and objective review of that assessment. And I will tell you that this requirement has been in the law for a long time. I don't think I really truly appreciated the burden it put on taxpayers until I represented a taxpayer at one time who had, that taxpayer thought it had overpaid its tax by $3.5 million. So that taxpayer filed an amended return seeking a refund of $3.5 million. The State Tax Commission, upon review of that amended return, thought the taxpayer had underpaid by $6.5 million. So we had a $10 million swing there, and in order for the taxpayer to have an opportunity for the court to review that, the taxpayer was required to post a bond twice the amount of 6.5, which is $13 million, and I never really appreciate the difficulty a taxpayer would have doing that. I knew that there would be a premium involved, but the bonding company said, in addition to the premium, you've got to provide collateral for the bond. The collateral is in the form either of a letter of credit in exactly the amount equal to the bond. I'm sorry, you got a $13 million letter of credit in this example, or the bonding company said you can post collateral in the form of marketable securities, but we want 1.5 times the value of the bond in marketable securities. So now you're at $20 million of marketable securities, and of course the process moves fairly slow, so the judicial review process could take 2 or 3 years. So I would submit to you in this one example, and there are others, that this is a very significant barrier, very significant burden that a taxpayer must pay in order to have the opportunity to have an independent judicial review. As you know, and Chairman Speed knows well, the companies that are seeking to locate in Mississippi are sophisticated companies. Multi-state operations, they can go anywhere. And I would submit to you that they look at not just the tax rate structure in Mississippi, they also look at the tax dispute resolution process and whether it's a fair process. The process we have in Mississippi is commonly called pay to play. Okay? You shouldn't have to pay to play in Mississippi. You should be able to have an opportunity to have your tax dispute looked at by a court of law without having a significant barrier to entry and a significant economic barrier. So I would ask this commission to look at the pay-to-play system in Mississippi and consider amending that and totally eliminating the pay-to-play system for judicial review of tax disputes in Mississippi. Thank you.
Thank you. The next person presenting is Lynn Evans with the March of Dimes. By the way, again, presenters, the lady with the flag is in the pink suit in the rear. She gives you your high sign. Thank you.
Thank you all very much for having us this morning. It's really important to this process that citizens of Mississippi get to come and have their say. I'm here this morning on behalf of the March of Dimes, and we are counting on you all, along with the great majority of people in Mississippi, to increase our state's tobacco tax by at least $1 for health reasons. I think you all know that Mississippi has the highest infant mortality rate in the nation. We also are first in low birth weight babies. In an average week in Mississippi, 147 babies are born before they're due. 95 babies are born with low birth weight, and 8 babies die before they reach their first birthday. These babies face an increased risk of serious health problems during their own newborn period, chronic lifelong disabilities, and they die more than other babies, healthy babies. Almost a fourth of Mississippi women of childbearing age report smoking, compared to 21.7% in all other states combined. So we do have a smoking problem in Mississippi. And we know that increasing the tobacco tax does decrease the smoking rate. Smoking nearly doubles a woman's risk of having a low birth weight baby and increases the risk of preterm delivery. Cigarette smoke contains more than 2,500 chemicals, including nicotine and carbon monoxide, which play an adverse role in pregnancies. Pregnant women who don't smoke are often affected by secondhand smoke. Secondhand smoke is a potential risk factor for preterm birth and other birth problems. Exposure to secondhand smoke has also been linked to SIDS, or sudden infant death syndrome. We have one of the highest SIDS rates in the country. It's up to all of us to make sure that babies are born healthy, and part of what we must do for that is make sure that mothers get good preterm care. In our state, the majority of mothers and deliveries are covered by Medicaid. We must make sure that Medicaid is funded fully so that these babies can get the care that they need, because it's in our best interest. Then they will grow up healthy and be productive citizens. We know that increasing the tobacco tax by at least $1 would result in decreased smoking in Mississippi, and especially among young people. And that's the group that are most likely to get pregnant. The cost associated with preterm birth in the United States is at least $26.2 billion. And you have a fact sheet in your packet about all of this. Finally, I want to urge you again, we are really counting on you. We need you to recommend an increase in the tobacco tax. The legislature is waiting for you to recommend an increase in the tobacco tax. The health advocates in Mississippi who deal with people with problems like prematurity, like SIDS, are counting on you to do this, both so that we will have the increased revenue that will result, and also so that we will have the health benefits that we so badly need in Mississippi that we can accomplish with this one simple thing. Thank you again very much for having us here this morning.
Thank you, Lynn. Next, we have Ed Sivak of the Mississippi Economic Policy Center.
Thank you, Mrs. Speed. Good morning. My name is Ed Sivak, and I'm the director of the Mississippi Economic Policy Center. We are a nonpartisan initiative of the Enterprise Corporation of the Delta that engages in rigorous and accessible analysis to inform the policy debate that affects the economic and social well-being of low-income families and low-wealth Mississippians. Before I begin, I'd like to acknowledge the contributions of Sarah Miller and Rebecca Dixon, two analysts on our team that made contributions to this report. We applaud the Tax Study Committee for taking this initial round of public comments at the front end of this process. Similar to other processes that make public policy recommendations affecting hundreds of thousands of people, we look forward to the next opportunity to provide comment upon the release of the recommendations. Additionally, we look forward to the same level of openness which has been really well done with the subcommittee meetings. As we engage in the process of tax reform, it's important to raise questions about how we can ensure that Mississippi has the necessary resources to move forward in the years to come. In that vein, our comments address the following: making sure our tax system is balanced, making sure we have adequate revenue to invest in future growth, and making sure that the tax system is accountable to the taxpayers. On the issues of balance, we know that persons with incomes between $13,000 and $23,000 pay more as a percentage of their income than any other income group on state and local taxes. We know that persons with income below $64,000 pay more as a percentage of total state and local taxes as a group than their share of state income in that group. Adding federal taxes into the evaluation masks the effects of the state's regressive tax system on working families. It additionally handicaps what we can do, what we have control over to improve the tax system for working families. So our recommendations that we would make to make the system more balanced would include the following. We should look at indexing the standard exemptions and deductions to inflation. None of our exemptions or deductions have been updated since 2000, and some have not been updated since 1981. As a result, working persons in poverty, these are people who are working below the poverty line, that's what their wages are now subject to income taxes. We could also enact a state earned income tax credit. This would affect 366,000 working families living in or near poverty in Mississippi. This would boost local economies. This would be money that would go back to municipalities and be spent locally. We also think that we should reduce the grocery tax by half. Mississippi is one of only 2 states that don't do anything to offset this grocery tax on working families. This is moving forward in Alabama, and it's there's the potential where Mississippi may be the only state left by the end of their session that taxes groceries at the full rate. On the issue of adequacy, we need to make sure that we have adequate revenue to allow for investments in future growth. While spending discussions have largely not been on the table through this point, we think that it's critical to evaluate revenue proposals through the lens of future spending needs. Businesses do not make strategic decisions that will affect a company's ability to make future investments by only evaluating the top half of the income statement, and neither should the state of Mississippi. If you look at a 2007 Forbes report that ranked the best states for business, Mississippi's overall ranking was low at 43. Forbes is obviously a very respected magazine that looks at business. However, we ranked 13th in the category that took into account taxes. Our overall ranking was brought down not by high taxes. It was brought down by low educational attainment, school quality, health, and income, all of which depend on a strong revenue system to make investments for future growth. One way that tax systems become adequate and stable is to capture areas of growth in the economy. At the very least, those areas should not be removed from taxation by large cuts. When it comes to income in Mississippi, growth has been largest for high-income families. Elimination or significant reduction of the income tax on high-income earners could jeopardize the adequacy of the revenue that is generated by the state tax system. The final recommendation is around those includes strengthening income tax to make it more balanced, looking at the brackets, broadening the sales tax base, increasing the cigarette tax, enacting combined reporting, which will close loopholes in corporate income taxes that allow companies to shift their income that should be taxed in Mississippi to other states. On the issue of accountability, I encourage you to look at the jobs tax credit. It's a $22 million tax credit, and no one can really tell you how many jobs have been created by that credit in the last year. It takes an intense manual process to count those jobs. We need to update our systems. In addition to updating those systems, I would encourage the state to make the investments to enhance our infrastructure to conduct tax incidence analysis. Tax incidence analysis would allow us to look at how much is this tax change going to cost or gain revenue to the state, and who will be affected, who will pay more or less. Texas does this, and we'd be happy to provide more information on this. Thank you for this opportunity, and again, thank you for your hard work.
Thank you. Next, we have David Stevens of the Mississippi Manufacturers Association.
Chairman Speed, members of the Commission, I appreciate the opportunity to speak with you. I'm David Stevens. I serve as the chairman of the Mississippi Manufacturers Association Tax Committee. I'm currently associated with Thompson Donovan Advantage Tax, a tax consulting firm. Formerly, I worked with two of the international accounting firms, and prior to that, I was the director of the State Tax Commission's Sales Tax Division. Mississippi manufacturers face unprecedented challenges in the global economy. Businesses in many other countries do not have to bear the same costs Mississippi companies face, such as regulatory cost, health care, and higher energy cost. In addition, wages as well as taxes are lower in the other countries than in the U.S. Economists for the National Association of Manufacturers estimate that all these factors contribute to a 32% structural cost difference between an American manufacturer and the average competitor in 9 of our largest trading partners. To remain competitive, we need to do whatever we can to minimize the impact of taxes and other costs on Mississippi manufacturers. The Mississippi Manufacturers Association hired Fluor Global Location Strategies to make a comparison of Mississippi taxes with the other 49 states. You may remember that it was Fluor over the years that has helped to locate several great companies to Mississippi, including Caterpillar and Nissan. Even with these and the other more recent equally impressive plant location announcements in Mississippi, we must continue to pay attention to what factors keep Mississippi from being considered for new investment and what present barriers to existing manufacturers' competitiveness. Because of the shortness of the time available, I'll only go into 2 of the taxes discussed in the report from Fluor Global Strategies that serve as a disincentive. They are the property tax on inventory and the franchise tax. Ideally, we'd like to see both of them eliminated, but there are other options for dealing with them, and I'll go into that later. The inventory tax not only falls on manufacturers, but also on retailers, pharmacists, and others who pay property taxes on their inventory. Manufacturers pay the tax 3 ways: on raw materials, on work in process, and on finished goods. The inventory tax forces companies to make decisions about production that are not entirely based on economic principles, but rather on how to pay the tax, the least amount of tax on the goods produced. Mississippi is only one of 13 states to tax inventory. Some states are phasing out their inventory taxes over several years to minimize the impact. In Mississippi, cities, counties, and school districts depend on property tax. With that in mind, another possibility could be to expand the current income tax credits to cover all inventory taxes paid, similar to the way it's treated in Louisiana, instead of capping it at $5,000 where it stands today. One of our members is closing a plant in Vicksburg because of the inventory tax. Simpson Duravent, which manufactures chimney and home venting products, will phase out operations over 24 months. CEO Stephen Eppert said in the January article in the Vicksburg Post, "The company will continue to have a distribution center in the southeast, but it won't be in Mississippi." The other tax I would like to mention is the franchise tax. This is an unusual tax in which we penalize companies for making investment in the state. The more you invest here, the more you pay. We think this is the wrong incentive to encourage manufacturers to come into or expand in Mississippi, and would encourage completely eliminating the franchise tax. Mississippi is only one of 16 states with a franchise tax. 5 of those states have caps on the amount of tax that's paid by the business owner, including our neighbor Alabama, which has a $15,000 cap on the franchise tax. Placing a cap on the franchise tax is another way to lessen the disincentive to invest in expensive new technology and plants in Mississippi. A third option for the franchise tax might be to allow the income tax credits from the state incentive programs to be applied toward the franchise tax, which is similar to the way it occurs up in Tennessee. I'd like to conclude with a few reminders of the importance of manufacturing in Mississippi. Manufacturing multiplies every dollar spent to an additional $1.37 in economic activity, greater than any other business sector. Manufacturing jobs pay 25% more than the national average compensation for the rest of the workforce. And finally, manufacturing pays more in health care benefits than any other economic sector except for the government. That concludes my report. Thank you.
Thank you. Next, we have Bobby Rushing with the Mississippi Association of Supervisors.
Thank you, Chairman Speed. To Commission, good morning. My name is Bobby Rushing, President of Mississippi Association of Supervisors. This morning, I would like to talk to you about the assessed value of a county. The assessed value of a county has a broad and far-reaching impact on county government. County taxes are based solely on the assessed value of the county. Millage rates are set based on the assessed value. Therefore, change in the assessed value have implications on county's ability to meet its obligations to the citizens. Any action such as exempting certain types of property taxes would cause a shift in the tax burden to the citizens of the county. A second issue concerning assessed value is debt services. The county's ability to repay debt is based on the assessed value of the county. By reducing the assessed value of the county, there will be possibilities that the county would not be able to cover its debt services without a millage or a tax increase. An extremely important point to make is that there is no true property tax exemption. When a particular property is granted tax exemption, the burden is simply shifted to some other property or to the taxpayers or someone else. There is not a county official in Mississippi that does not recognize the business inventory tax as a regressive tax. With that being said, the Governor's Commission should also recognize the impact that exempting this property would have on the local tax base. Cutting inventory taxes or any type of taxes will have a dramatic and drastic effect to the counties. It would mean a cut in roads and bridge services, schools, colleges, law enforcement, and other services. As a reminder, counties do not receive sales tax. counties solely rely mostly on ad valorem taxes. As in a closing, I ask this commission here today is please take in consideration that any tax cut will be bad on the counties and the taxpayers of the state of Mississippi. Thank you.
Thank you. And in our next meeting, the counties and the cities are going to have an opportunity to expand on their thoughts. Next speaker we have is Mr. Charles Kinney.
My name's Charlie Kinney, and in business, I'm a manufacturer's rep. I've represented manufacturers for 20 years in the state of Mississippi, but I'm coming here today to talk to you about, in behalf of homeowners. I'd like to thank you for the opportunity to address this commission, and hopefully prudent decisions will be made to encourage home ownership and lessen the tax burdens on our citizens. I would like to share some simple things that bug me about property taxes. My wife and I built a home 30 years ago for $19 a square foot. I paid taxes on every component of my home during the 90 days it took me to complete. I longed for the day that I would retire the debt that would allow my wife and I more dollars to spend or put into a retirement fund. We did pay off a house and debt by applying simple conservative principles, but I now realize I will never own my home as long as the tax burden raises its head every year. I never understood how a free people would allow this to happen. It bugs me to pay taxes annually on something I paid taxes for 30 years ago in full. Increases in appraised value are a deterrent to people who stay in the home on a long-term basis, as I have for 30 years. And as you know, the taxable value increases. It bugs me to see local mayors lobbying the legislature for more access to property owners' money, then turn around and spend our dollars foolishly. The more bureaucrats paid to reappraise while the taxpayer is struggling. I resent, for some reason, a person coming onto my property every so many years to see if I improve my property so the state can tax it more. This will keep many from making improvements. I'm one of them. There are physical things in life that a family requires to survive. Number one, a roof over their head. Number two, food. Number three, medical care and medicines, especially in later years. If one loses their job or has a financial disaster or is trying to live off Social Security, having these three things are paramount. With these three, one might survive physically and financially difficult times. Having the additional burden of taxes on housing, basic food items, and medical necessities can be the straw that breaks the camel's back. Many people today seem prone to make unwise financial decisions and don't think of the long-term wisdom of purchasing a house they can afford and paying for that house in 15 to a max 30 years. Too many of our young people will never pay for their home and will be living in apartments as they approach their time to draw Social Security. This is an awful prospect that will have terrible long-term ramifications for all taxpayers to bear. A system that retaxes property already paid for does not encourage home ownership. We should be educating citizens about the benefits and necessities of owning a home. The importance of home ownership be taught in our schools and to our families. This instant gratification society will bankrupt itself if their eyes are not opened. In a socialistic society that we are creating, the hard-working, self-sacrificing people go down the tubes because the foolish become wards of the state. I love this country that allows a man to grow and prosper unimpeded, or at least we used to. Many spend their lives building a good life for their families and at the same time voluntarily serving the truthfully needy with their surplus. This is what God intended. This world we live in today will be a different place if we don't allow the freedom to give or not to give. The rich that don't make their own decision to share their wealth will ultimately pay a much higher tax. The answer is simple. Raise sale taxes on most items, excluding some necessities of life needed for, especially for the sick, the poor, and the elderly. With this system, a citizen can make a choice to pay the tax or not. If you can't afford it, you won't buy it. PSAs, public service announcements, should be used as a vehicle to educate our people. These ads should be clear and explicit, explaining the benefits of home ownership. Thanks for giving me the time.
Thank you. Next, we have Mike Cashin with the Mississippi Hospitality and Restaurant Association.
Thank you, Mr. Chairman. You do have a copy of my presentation in your packet, and I encourage you to follow along if you'd like. My name is Mike Cashin, and I am the Executive Director of the Mississippi Hospitality and Restaurant Association. Make no mistake that Mississippi restaurants are a cornerstone of our state's economy. In fiscal year 2007, 79,140 employees helped generate $2.8 billion in sales, which equates to a $196 million contribution to the general fund of the state. In addition, $48 million of local and private tourism taxes were also generated. These local and private tourism taxes are of critical importance to our industry. The original intended uses of these taxes were to promote tourism activities, tourism advertising, and to help stretch the state's limited tourism budget. It was also used to help fund and create the operation of CVBs throughout the state. In 2004, there were 47 taxing entities, local and private taxing entities. Currently, there are 59 taxing entities. This is an increase of almost 25%. Also in 2004, you'll note that there was $35,435,000 generated. Fiscal year 2007, there was $48 million generated. This is a 36.7% increase in the amount of local and private tourism funds, of which 2/3 of that money typically comes from the taxation of restaurants, with 1/3 coming from the taxation of hotels. You'll note that also in 2005, 2006, you saw consistent double-digit growth in both phases of those tax collections. Unfortunately, in 2007, we see hotel tax collections dropping by 3%, while restaurant tax collections only increased by 2.1%. And this is in spite of the fact that we had a 25% increase in the number of taxing entities. The concerns that we have, as Mr. Whittington noted earlier, is that intended usage language has become too vague. And I quote, "For the purpose of providing funds to promote tourism, industrial development, and general economic development in the immediate surrounding areas." This came directly out of existing legislation. Not only has the language become too vague, the intended use language is not targeting tourism. Here's two examples out of legislation that was introduced. Quote, "For the purpose of providing funds for an increase in the salaries of sworn career police officers," and the second is "for the purpose of providing funds to promote economic development in the county." Another problem is that how the money is spent, tourism money is spent, is not always made. Those decisions are not always made by people who are familiar with how the hospitality and tourism industry works. Another issue is the lack of fiscal disclosure on bricks and mortar projects. Taxing entities and all the stakeholders need to know how much a project will cost, including the cost of money, the financing terms of brick and mortar projects, and specific dates in legislation when these taxes will go away. I noted that 2007 started a trend downwards. I will tell you that 2008 year-to-date figures are not encouraging. The combined tax collections for fiscal year 2008 year-to-date are currently down 4.4%. I'd also like to stress to the committee that the average restaurant in the state of Mississippi generates $700,000 in sales and operates on a 4% profit margin. That's a $28,000 profit for a year's worth of work. Today's economy only exacerbates the problem. The average restaurant has seen a 36% increase in raw product costs, which means another $88,000 in additional costs that they simply cannot pass on to the consumers. When you're operating on a $28,000 profit margin and you increase costs $88,000, it doesn't take a rocket scientist to figure out that restaurants are in a very precarious situation. This is the reason why it's absolutely incredible and absolutely important that tourism money is used to fund tourism. Our recommendations are to limit local and private tourism taxes for the original intended use, and that is the promotion of tourism. Make sure also that industry representation on any entity responsible for the spending of tax dollars. We also suggest that all local and private tourism taxes require fiscal notes on any brick and mortar projects that are tourism related. And our fourth recommendation is, as these taxes do come up for repeal or extension, we may want to consider requiring performance reviews to make sure that the taxes are being spent properly. Thank you for your time.
Thank you. Next, we have Mr. Michael Lenore.
Ladies and gentlemen of the Commission, thank you for this opportunity to speak to you today. Unlike most of the speakers here this morning, I'm a small business owner, and I would like to share with you a brief story about my experience with the Tax Commission and then my suggestion for making Mississippi a better place to do business. I'm proud to say that my business is a true Mississippi success story. My technology business was founded in 1992. A graduate of the incubator program here at the Jackson Enterprise Center, we provide software development and technology services to clients all around the country. 16 years later, we generate over $1 million per year, resulting in a sales tax alone of $70,000. But more on that later. Over the years, we have interacted with and done work for many state and local government entities, including the Mississippi Department of Economic Development, the Department of Health, the University Medical Center, the Mississippi Development Authority, and many other entities. But by and large, every entity that we have, of state and local government with which we have worked has been helpful and has had, for the most part, a very pro-business attitude. And for that, I, my family, and my employees are thankful. However, there has been one major exception to this, and that's the sales tax division. Several years ago, businesses in my technology industry were targeted for attack by the Sales Tax Commission. My business was audited, a process that took over 40 hours of my time and over 40 hours of an auditor's time. Despite having the counsel of a certified public accountant, I was apparently not collecting all of the sales tax that I should have been collecting, so I scheduled an appeal. Based on my previous friendly experience with state government, I expected to walk into the sales tax division office and make some new friends. I would share with them the real-world knowledge that I had accumulated and let them know that their tax code had some fuzzy meanings with regard to the current state of technology that were not quite right in the tax code. Well, how naive I was. There was not one single thing that happened during the whole ordeal that indicated that they were there to guide me or help me in any way. They approached the appeal with an adversarial tone and had a cavalier attitude throughout the process that was designed to make me feel uncomfortable and embarrassed. I could interpret the technology referenced by the tax code. I was the electrical engineer. I have the master's degree in computer engineering. I'm the technical expert. But to them, I was just a layman that owed them some tax money. And my interpretations of the words of the tax code were of absolutely no interest to them whatsoever. They didn't hear what I said, and they didn't care. It was a humbling experience, so I paid up and I moved on. So what did I learn from this experience? I learned that the audit was not a good business decision for the sales tax people. They missed 9 years of sales tax collections from me just to audit me for 3 years and ultimately settle for pennies on the dollar. I learned that they do not have a pro-business attitude. They are reactive and only call after the fact when you're already in trouble. And number 3, I learned that their attitudes and practices have created a bad reputation in the business community. So here is my suggestion. With a positive, pro-business approach, the sales tax division could increase collections and avoid the stigma of being considered an enemy of business. How can they do this? Simple. conduct a friendly audit of new businesses within the first year of business, review their sales tax procedures, and get them on the right track from the beginning, without the fear of an audit and without a slap on the wrist. If they have time to spend 56 hours fighting with me over a few $1,000s, then certainly they have some time to spend a few hours helping a new tax-paying entity get off on the right foot. Please accept this suggestion in the spirit in which it is offered. I want Mississippi to be the best place in the universe to do business, and this simple pro-business solution is a good place to start. Thank you.
Thank you. Next, we have Ms. Linda Ferguson. Okay. Linda Ferguson's not here. Barbara Powell with Common Cause. Ms. Powell. Kevin Altman with the Council of Independent Tobacco Manufacturers of America. Mr. Altman. Danielle Carroll, Mississippi Association of Medical Equipment Suppliers.
Hello, everybody. I'm so honored to be here and present to you today. Thank you for allowing the time to present our difficulties with our industry and the sales tax laws in Mississippi to you today. I represent, I'm the vice president, past president, ever since September of 2003 for MAMES, which stands for Medical Equipment Association. Mississippi Association for Medical Equipment Suppliers. We represent over 300 small medical equipment companies in Mississippi. And over the past 3 to 5 years, many of our members have reported to us being audited with varying responses and different answers to some very good questions. Basically, in a nutshell, our members feel that there is no consistency. MAMES requested a letter ruling from Mississippi State Tax Commission on March 28th of 2000 with no answer. MAMES requested a representative come to our meetings from 2003 until 2006. No one came after repeated inquiries. We were given at that point a response saying that we will need to request a letter ruling in writing, in which we did again. MAMES requested a second letter ruling for Mississippi State Tax Commission on March of 2007, again with no answer. We did receive our ruling this year, March of 2008. It apologized for its delay in getting to us, and we also had a representative to our MAMES meetings in May, and so to try to go over some clarifications, and still we were yet left from that meeting very confused. As much misinformation has been given by actual representatives of Mississippi State Tax Commission, how are we to feel safe from audits in the future if we do not tackle now the areas not covered in the sales tax codes? For medical equipment, the sales tax codes are outdated, many in which date back to 1972. Basically, the letter ruling states that medical equipment companies are to back out 7% sales tax, knowing that we cannot bill for it. We cannot bill for it. We cannot bill insurance companies. We cannot bill Medicare. We cannot bill Medicaid for the 7%. And it's against federal law to bill that patient then 7%. So this is not a sales tax, but rather an income tax. Insurance companies simply refuse to pay sales tax. If we cannot bill for sales tax, how can we collect it? It is against Medicare's federal law, like I said, and against many insurance contracts and agreements that medical equipment claims bill the patient anything over the fee schedule or the set amount. The majority of the nation, other states, which I've done extensive research in, their medical equipment associations have been freely to give me what they know, but the majority of the nation, as far as medical equipment companies go, are exempt from sales tax, simply due to the fact that there is a prescription from a licensed physician for life-sustaining medical equipment. The Board of Pharmacy and many other entities such as Medicare and Mississippi Medicaid, as well as many others, heavily regulate what we do. In order to provide Medicare patients with equipment, we must be accredited this year, or we should lose our billing number, and this is for the whole industry. At the same time, Medicare is trying to outsource competitively bidding projects, and I'm not sure if anybody is aware of that, but scholars and many researchers have studies that prove that this will fail. However, our industry has been faced with cuts and cuts and cuts with additional added expenditures with no support. We ask you today to please allow us any way possible, and MAMES will promise to help with any new wording for legislation in order to move forward. Thank you.
Thank you. Next, we have Mr. David Harrington.
Good morning. I'm David Harrington. I'm a small business owner. I own actually a very small business. Small businesses generally are the result of a person's idea. In my small business, I've chosen to invest my time, my talents, and my monies in a business that provides medical equipment, sales, and services to primarily the small hospitals throughout Mississippi. This idea came about because I recognized that the needs of these small hospitals weren't adequately being met by the larger corporations. Now, as a small business owner, as a single owner of a limited liability corporation, I'm required to pay self-employment tax, just like a sole proprietor. Now, in this business, I purchase refurbished medical equipment and hopefully resell it at a profit. Now, I'm required to collect and then pay the state sales tax on the medical equipment that I sell. Now, this is even if I sell the equipment at a loss. I'm still required to make this collection. Now, if I choose to inventory this equipment, I'm then required to pay an inventory tax on the equipment that I've invested my money in, waiting for this product to then be sold. A large portion of my business, however, is the selling of my time and my talents in the form of consulting or in the form of other services. Sales tax, again, is required to be collected even though no product was sold. All I've sold is my knowledge and my time, but yet I'm collecting sales tax. Now, if I were a professional, and some of you in here are, that is a doctor or a lawyer or a CPA, those services wouldn't be taxed. And of course, because those services aren't taxed, that business is not burdened with the collection of and then the paying of the sales taxes. Now, should I choose to hire an assistant to help me, I'm then required by the state to pay into an unemployment tax. This is to protect that employee in case of a layoff. But yet the state provides no such protection to the small business owner. We're very vulnerable, obviously, to failure because our nucleus is so small. So if you have one rotten apple, so to speak, it can spoil the whole bunch very, very quickly. What small business owners need is support, not obstacles from the state. When a business is able to expand, the state's revenue also expands. There are several things that the state can do to lower the risk of operating a small business and to help this business prosper. Small businesses are not looking for a handout. We're simply looking for a level playing field so that we can compete against the larger corporations. On the second page of the handout that you have, I have listed 8 different things that I feel that would be very beneficial to the small business owner. First of all, eliminate the inventory tax. The state now taxes inventory products waiting to be sold and then taxes the sale of that product, taxing it twice. Provide a larger discount to businesses collecting sales tax for the state. I often joke that I work for the state as a tax collector. Provide an incentive up from the now current 2% with a cap of $50 to say 5% with a cap of $100 on each return. Provide an exemption for the first $25,000 in physical assets. This will encourage a business owner to improve his property, to improve his business, to make it better, more presentable to the public, and grow. My time is up, I was told. You can look at the others there. Allow the business to expand. The last one, strengthen laws that would enable a minority business owner of a small business to force a forensic audit to recover embezzled funds in a timelier manner. If profits were embezzled, so were tax dollars. Thank you.
Thank you, sir.